Thank you for standing by, and welcome to the LBT Innovations Quarterly Investor Call. All participants are in a listen-only mode. There will be a presentation followed by a question and answer session. If you wish to ask a question, you will need to press the star key followed by the number 1 on your telephone keypad. I would now like to hand the conference over to Mr. Brent Barnes, CEO and Managing Director. Please go ahead.
Thank you, Lexi, and welcome everyone. This is Brent Barnes, and I'm pleased to welcome you to LBT's quarterly investor call. The previous call we had was during our annual general meeting back in November of last year, and it's good to be speaking with you all again. We appreciate your ongoing feedback received over recent times and hope that this call provides additional information about the company and our progress and opportunity to better engage with us. The format of the call will include an overview on operations and financial matters before we open it up to some question and answers. As with our last call, a recording of the call will be made available on our website. Now I'd like to introduce our Chief Financial Officer, Ray Ridge, who will be with the call with me today.
Thanks, Brent. A brief formality before we commence. I would like to remind those on the call that today's update may contain forward-looking statements which do involve inherent risks and uncertainties. Those risks and uncertainties include those disclosed on our ASX lodgements, which we recommend that you review. There are, of course, reasonable grounds for any forward-looking statements made today. However, due to their inherent uncertainties, we recommend that you do not place undue reliance on those statements, and actual results may differ materially from those forward-looking statements. We're now ready to go. Back to you, Brent.
Thank you, Ray. In the call today, I'm going to provide some commentary on our activities during the quarter to the end of December 2018, which we outlined in our Appendix 4C filed with the ASX last week on the 31st of January, as well as an overview of our financial results and finally our business outlook moving forward. Turning firstly to the sales update for APAS Independence. In Australia, we've been going through an approval process with a customer with multi-site demand that has taken longer than we expected, as reflected in our trading update in November of last year. While we are expecting to progress commercial negotiations with this potential customer last calendar year, we've been informed that our proposal is being considered as part of a wider business improvement initiative. The underlying business case and clinical need for the purchase of the instrument does, however, remain positive. While the company recognises that not delivering on the sales guidance provided to shareholders is frustrating, I would like to put this in the context of the wider progress we've made in our early sales activities. While we are pressing ahead in Australia, it is a very small market by global standards, and greater opportunity for material sales exists in the large markets of Europe and the US. Our sales potential will only be recognised through the appointment of well-resourced distributors in these key markets. This, along with LBT's direct sales efforts in Australia, remains our focus. To this end, our joint venture company, Clever Culture Systems, or CCS, is aggressively progressing the early sales process in the US and Europe, with the objective of building awareness of the instrument in those key markets and developing a qualified pipeline of potential customers. This requires a targeted approach to contacting those customers most likely to acquire the instrument and commencing the lengthy sales process inherent in any capital equipment and a new technology. A limited number of sales are important as a tangible proof of the wider pipeline development activities being undertaken, including sales in the small market of Australia. While the timing of these early sales can be difficult to predict from one quarter to the next, we remain focused on the wider early sales activities being undertaken globally with the aim of setting the scene for distributor engagement. In November of last year, we were very pleased to announce the first APAS Independence instrument placed into Hennepin Healthcare System in the United States. The instrument has been successfully installed, and we continue to work with Dr. Glenn Hansen and his team to establish them as our North American Centre of Excellence for APAS Independence. In line with our planned expansion into the US market, a 510K application for the APAS Independence has been filed with the US FDA in December of 2018. Obtaining FDA clearance for the APAS Independence instrument facilitates the ability for sales to commence in the single largest pathology market globally. Following the submission in December of last year, the company has not received any feedback from the FDA at this time, which is not unexpected or unusual. From a US perspective, we delivered important milestones during the quarter to prepare for expected market launch this year, which is a positive step forward in our commercialization plans and a significant achievement for the company. Switching gears to Europe, our primary focus remains on Germany, and we have appointed a dedicated sales executive who started in December of 2018 and has now been in the role for 7 weeks. An initial induction was completed in Europe with him last year, and he is currently spending 2 weeks in Australia going through in-depth training with our technology, science, and sales teams. Underpinning his sales efforts was the establishment of key opinion reference site Dr. Labor Wisplinghoff in Cologne, Germany. This is the single largest lab in Germany and one of the largest labs in Europe. During the quarter, additional updates to the software were completed, and several thousand plates of different media types have been run through the instrument. This European reference site is an important start in demonstrating clinical utility for European labs and also for supporting developing the APAS technology. Ray, I'd like to turn it over to you again to take us through the financial information.
Thanks, Brent. Hello, ladies and gentlemen. I'd like to briefly review the financial results that were reported in the Appendix 4C lodged with the ASX. These numbers are all in Australian dollars, and in accordance with ASX listing rules, they are not audited. So for the quarter ended 31st December 2018, the company generated net cash inflow from operating and investing activities of $400,000, which was $1.3 million better than forecast in the September activities report. This was driven by 2 factors. Firstly, a $1.9 million R&D tax incentive receipt being higher than expected. And secondly, other net outflows of $1.5 million compared to our expected run rate of $2 million, simply being impacted by the timing of LBT's 50% funding contributions to CCS. For the coming quarter, we forecast LBT's net outflows to return to our expected average run rate of $2 million per quarter. Our cash balance at the end of December 2018 was $5.7 million. We also have $4 million in an undrawn loan facility provided by the South Australian Government. The facility is available for drawdown through to December of this year. The facility provides LBT with the ability to draw down the loan in instalments of $1 million, $1.5 million, and a final $1.5 million. Each drawdown subject to achievement of operational milestones. Back to you, Brent.
Thank you, Ray. I'd now like to shift gears and give an update on the business outlook. Building an early sales pipeline in Europe and the US continues to be our key focus in the first half of this year, and we have formulated a number of market awareness initiatives to be rolled out this year. In Europe, we will again showcase the APAS independence at the European Congress of Clinical Microbiology and Infectious Disease meeting in April of 2019. We expect our key opinion leader reference sites to present their experience using the instrument in a similar way that was done by St Vincent's Hospital in Melbourne at last year's conference. Knowing the timeframes required for the sales process, we remain focused on targeted awareness in order to build demand and market expectation ahead of commercial launch. In the US, we hope to receive feedback from the FDA and progress through the 510K process, working towards the goal of achieving FDA clearance. In Australia, we expect to place an instrument for evaluation by a new potential customer in this current quarter. From a technology perspective, work continues in our development of our next analysis module, which is MRSA. A version of this module is already installed at Labor Dr. Wisplinghoff and is performing as expected, with subsequent validation activities to occur during the half in order to release a commercial product that we expect to occur in Q3 of the 2019 calendar year. Last month, we announced the appointment of Simon Arkell as a non-executive director of LBT, commencing 30th of January. Simon is currently co-founder and president of Deep Lens, a US-based artificial intelligence company focused on the deployment of a well-known digital pathology platform. The board continues to reflect on its skill mix and composition during a time where our focus is on establishing global channels to support commercialization of our APAS technology. Simon's background in software and AI companies within the US facilitates a channel opportunity, especially as we focus on US expansion. So in closing, we remain extremely positive about a number of foundational milestones achieved in the previous quarter that further support a global footprint for APAS independence. We now have key opinion leader reference sites in Australasia, Europe and the US, and are commencing targeted sales and marketing activities in these large markets of Germany and the United States. I'd like to thank you all for joining the call today and hope that this update has provided some context with respect to our progress. With that in mind, I'll now hand it back over to Lexi to open it up for question and answers.
Thank you. If you wish to ask a question, please press *1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press *2. If you are on a speakerphone, please pick up the handset to ask your question. Your first question comes from Paul Jens from PAC Partners. Please go ahead.
Okay, Brent and Ray, can you hear us okay?
Yeah, I can, Paul.
Just two quick questions. One is just with the drawdown of the loan, are you on track to deliver those milestones so you can draw down that loan by end of this year?
Thanks, Paul. It's Ray. I'll take that one. Yes, I can confirm that we are tracking, as you would expect, that milestone or those milestones for the 3 drawdowns very closely. I'm also in constant contact with the South Australian Financing Authority in terms of our reporting requirements to make sure everything remains on track. The first milestone we can draw down on at this point. The milestones are largely built around FTE increases based in South Australia. These are in our forecasts and they are part of the strategy to insource at a lower cost a lot of our software development and AI.
Good. And then just, that's excellent, because that gives you access to basically $10 million from here, which is very strong. Just onto the numbers of APAS units to be sold in the next 6, 12 and 18 months. Are you able to give at least some rough forecasts for 18 months, perhaps, if the short term is a bit tough? Brent?
Actually, I'm happy to take that one also.
Sure.
Just firstly, linking back into a few points that Brent covered, all of our activities at the moment are absolutely focused on distributor appointments as the path to achieving the true sales potential that we believe the APAS has. And prior to these distributor appointments, we are progressing the sales process for a capital item involving new technology with a relatively small team. So we're very focused on distributor appointments and developing a qualified pipeline of sales, particularly in the US and Europe, with the aim being that it shortens the sales cycle time for distributors coming on. So that is the focus, and I prefer to answer it in that context, not avoiding the question. Obviously, part of that pipeline development, and as we go through making contact with those potential customers in both geographies, we would expect some sales to occur as a tangible proof of the market potential and also the commercial utility of the product. So our actual forecast, I prefer not to give a number because it is quite low prior to those distributor appointments, and as we've found in the past, it's quite binary. You know, we gave a forecast of 5 on the back of a multi-site sales potential in Australia, and that didn't happen, and we didn't hit 5. Now, that's still very live, that opportunity, but it shows the danger in giving a number.
Okay, thanks, Ray. Thanks, Brent. Thanks for your time.
Thanks, Paul.
Thank you. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. We'll pause briefly to allow questions to enter the queue. Your next question comes from Keith White, a private investor. Please go ahead.
Good morning, gentlemen. Just a quick question regarding the cash flow. In previous guidance, you've sort of hinted that this company be cash flow positive in 2020. Is that still what you're thinking, or has it changed?
Looks like all the questions are heading my way today, which is fine. Thanks for that, Keith. At the end of December, as mentioned, we do have $5.7 million in cash. We also have the $4 million low-interest loan available from the South Australian Government. We also expect to continue to receive the R&D tax incentive receipt for the 2019 financial year. With our underlying cash spend of approximately $2 million per quarter, and we continue to minimise costs where possible. Therefore, we are forecasting to have sufficient cash to see us through to 2020, even on limited sales. Beyond that, really depends on a number of factors, mostly the timing and status of distributor appointments in the key geographies. I hope that answers your question, Keith.
Yeah, no worries. It probably relates to the previous question, I guess. So, okay, thanks for that.
It was good to clarify. Thank you.
Thank you.
Thank you. There are no further questions at this time, and that does conclude our conference for today.